So we'll just start with Meta stock, Facebook, as it was a year ago or whatever. And this is a pretty interesting one because it fluctuates a lot in price. And I know a lot of stocks do fluctuate and they're quite volatile, but Meta's just so up and down, especially over the past year, past 2 years. I mean, a year ago, it was at $230 and then it went down to $90, like, I don't know, 3 months ago or something. And now it's back up to 210. So I just wanted to get a feel for what you think on the volatility of Meta stock, but also if you have a sort of intrinsic value of from you for Meta stock.
So revenues and net income and advertisement income slowed down a little bit over the last 8-9 months. And that was the first factor that crashed the stock. And the second factor was that Mark announced how he's going all in on his metaverse. And he will spend 30 billion, every single penny that the company has on the metaverse. And that is exactly when the stock hit that bottom of 90, because everyone thought that the business is slowing down, and then we are betting everything on Mark's crazy idea. As the stock went down, in the next conference call, immediately Mark changed his speech and started talking about cash flow, about profit, about optimization, and how he will spend less on the metaverse. So he sucked up to Wall Street. He followed what analysts wanted, and lo and behold, the stock is doubled or 130% since the bottom. However, my opinion is it's still the same business. It just costs now twice more than it was costing 4 months ago. Nothing has really intrinsically changed except for spending 4 billion less on the metaverse. So not 30, but 26 or 22. The business, when I look at the business, I see a lot of weakness because people are spending, I think, less time on Facebook, and I practically don't even spend time there. But if you scroll through your Facebook feed, there are more and more advertisements, more sneaky advertisements. Usually it was written sponsorship, and now it's not an advertisement. Now it says suggested for you. The number of advertisements, I think, went up very much. So they are trying to keep that cash flow. They are squeezing the last penny out of it, but I think people are feeling, and I think the average age there on Facebook is 60 now, Instagram likely 40, and the youngers are at TikTok or something like that. So there is weakness. They will try to milk the cash cow as long as possible. And then the bet is on the metaverse. The only thing here is valuation. If I'm betting at a P ratio of 10, like it was 4 months ago, it's a different bet than now with a P ratio of 25. So I expect the stock will continue to be volatile. There will be bad quarters. Then they will try to engineer improved numbers to push the stock up because they have the stock options. They benefit from higher stock prices. So it's all a game. Unfortunately for Facebook, it's becoming a Wall Street game. And when a company starts to think about what Wall Street thinks, then it's usually a red flag.
So do you think maybe Zuckerberg and the management team are focusing too much on what Wall Street think as opposed to the long-term underlying business of Meta?
I think they are trying to please Wall Street, and then they are focusing on the metaverse because they know that this business as it is now will not last. That's why they tried to promote the metaverse as the solution to the not lasting business. But that backfired because then people said, okay, your business is not working and the metaverse is just a bet. We have no idea how the metaverse will look in 5 years, whether you will dominate or not. And if all the young people are leaving, then, and that is the source of the domination down the road, then it's riskier and riskier.
And do you really think their underlying business model is kind of fading away with Facebook and Instagram, and people are actually going to move long term to the likes of TikTok, like over the next 10 years? Like, how likely is that of happening? Or because TikTok has its problems too. Like, I don't know about you, but I personally hate TikTok. Like, I can't go.
I don't use it. I don't know what's going on there, but I think everyone has now a smartphone and things like that. The thing is that our time on how much we're going to use is limited, and everyone is competing for that time. We are now making a video for YouTube, for a podcast, and we are competing for your attention. Then you have Facebook, you have this, you have that, you have so many of these apps, and there will be new things coming constantly that are competing constantly for your attention. And the main driver of profits and revenue is your attention, because where there is your attention, there will the advertisement be. And it's just extremely competitive. That's the situation. And there is more and more content all over the place.
Yeah. But you got to say Facebook, at least in the past, have been very dominant on with regards to that, getting people's attention, and just that platform of being able to communicate with other people. People have seemed to love it. I do agree with you with what you said about Facebook. Like, the more I go on the platform, I can't go on it for kind of more than 10 minutes because it just gets annoying. And after 10 minutes of doing whatever, then you get more into this content that you don't even really want to see, like more sponsored posts and reels and stuff like that. I like to go on Facebook for like maybe once a day for like 10 minutes, just get a quick thing to see some photos or whatever. But I can't spend too long on there. And I agree. They are posting. I think that they seem to be posting more sort of sponsored posts, and it seems anyway, for me, it does seem less user friendly.
I mean, it's still there. It still has the users and everything, but it is the question: how much can you grow on that base that you have? Because if you have peaked, then you deserve a P ratio of 10. If you're still growing and you will double over the next 5 years, you deserve a P ratio of 20, 25. But the key question is, can Facebook double on what it has now? Of course, people use WhatsApp, but it's free of advertisement, free of anything else. And if you change that, someone else will offer the same for free.
True.
Because that's why they are not monetizing it.
Do you think someone else will be able to offer, just like, how do these businesses make money then? Like, let's just say if WhatsApp was a pure standalone business, how do they just offer it for free?
As long as they have investors willing to put in money and growing and hoping that they can sell it at a good price to somebody else, then it works. For example, the Western world uses WhatsApp, but if you go to Croatia, nobody uses WhatsApp. Mostly they use Viber or some other competition. So it's very interesting how quickly a community can switch to something else.
And as I was telling you earlier, I'm in Thailand right now. And in Thailand and in Southeast Asia, they all use Line. And in China, I think they use some other Chinese platform or whatever. So that's interesting. I mean, I just remember reading that Facebook have 3.7 billion users, and then I think about the law of big numbers, like how much can they keep going up? If they double, then that's like they've got the entire population using their platform.
But there is not that many have iPhones and smartphones and things like that. So they can grow a little bit, but with these apps, it's a very quick trend. You are there, but very quickly somebody else can take your position if you are not careful with it.
True. Just like how Facebook took the one before Facebook when I was young was a thing called Bebo. And Facebook overtook Bebo in like a year, just like everyone moved to Facebook. That's true. It's very, very hard to tell how, how long their useful life is for the platform. But
And
so let's say Facebook was selling, like, so when you try measure an intrinsic value on the stock, how do you think that through something like Facebook? Like,
I'm trying to see, okay, what kind of value are you delivering to me as a shareholder? And then when it comes to Facebook, yes, they make their 20-30 billion per year still. But then the question is, okay, if you are investing all that into the metaverse, can I be sure that the metaverse will be worth 500 billion in 7 years?
Yeah.
Because now we are talking about Facebook and competition for the attention on the apps. But here we are talking about competition for the whole metaverse. Who will win there? Now we have new competitors, Apple, Google, who knows who will enter that game and how will that go? It's playing a lot with consumer preferences, and that is always risky. When something is risky, you want it at a fair valuation or with a margin of safety. And there comes the risk and reward valuation, 10, 25, 50, and that's a big difference from an investing perspective, of course.
Yeah. So were you liking the stock when it was at $90 a share?
I think I made a video saying how it is too cheap.
Yeah.
And then, of course, now it is the same business from that valuation, risk and reward. It was cheap then. Now it's not that cheap anymore.